So we are live. Today's going to be a little bit different, you guys, because I am driving. But it is Mortgage Crush Mondays. Tag a friend, shout out a friend. I'm going to give everybody some time to log on. As you can see, I am driving, but I'm super excited to talk to everybody today. I'm just excited. Today's been a great day with just a lot of information that I have. I'm logging on to Instagram too, so give me some time. Again, tag a friend, let a friend know. We are about to start our MCM, our Mortgage Crush Monday. We are crushing today, and we are crushing on mortgages. Hi, Auntie, for joining. Welcome, Charles Atkins. Hey, Yaya. Welcome. Again, it's Mortgage Crush Monday. Hey, Kim. Mortgage Crush Monday. Tag a friend. Tell them we're about to go live, and we're about to get into this information. I'm driving for probably about the next 10 minutes, and then I'll be able to pull over. But I'm super excited about everything that's going on today. I have a lot of great information for our Baltimore marketplace, Baltimore City that is, and also for the Prince George's marketplace, and the programs that are available to everybody. So again, tag a friend. I'll give everybody like another 30 seconds or so to get on to join us for Mortgage Crush Monday. I'm getting tongue tied there trying to drive and talk to both screens. So Instagram, I'm kind of just sit you guys on the side, and as you join in, I'll take a look and everything, but I'm going to just really focus on Instagram and driving, so hold that for me. All right, so you guys, just recapping over the things that we've talked about the past couple of weeks. One of the big things that we talked about was just the home buying process, being able to get pre-approved, being able to, we talked about down payment versus closing cost assistance. We talked about being able to just monitor your bank account statements, making sure that you're not overdrafting your accounts, knowing that loan officers look at your NSFs, meaning your non-sufficient funds. They look at year to date, meaning the entire calendar year. So although you only have to provide 2 statements on your bank statements, on the last page of your bank statement, there is a transaction history of how many non-sufficient funds you've had over the entire year. Hi, Jonathan. Thanks for joining. Hi, Bruce, and hi, Talea. So again, bringing us up today on Mortgage Crush Mondays. So I'm going to start in Baltimore because I'm super excited. So PG, just be patient for one moment. But Baltimore City has some of the best programs in the country right now to buy Baltimore back. We're buying into Baltimore as a program currently being offered, where they are giving away $5,000 just for taking a tour of Baltimore. I'll say that again. The city has a program where they are giving away $5,000 just for taking a tour of Baltimore. Hello, Tina. And Nakia, welcome to Mortgage Crush Mondays, you guys. And so, and again, I'm talking about Baltimore. I'll switch to the PG County area in just one second. But Baltimore, January 26th. Sorry, Instagram. Okay, I'm back. The phone rang, you guys, and it knocked me off. I didn't know what to do. It was Daniel, the loan officer, calling. Hi, Michael. Thanks for joining. Hey, Paul. I hope everybody will see that I'm back on live, and everybody was interrupted. The phone rang. It was Daniel, our loan officer, so he will be joining us shortly. So back to the program that's available in Baltimore. PG, just be patient with me. Baltimore, buying into Baltimore. By taking a tour of Baltimore, the city, this program will give you $5,000 that can be used towards your down payment or your closing assistance. A free $5,000 for getting on a trolley and looking at 10 neighborhoods in the Baltimore City area makes you eligible to get $5,000. Now, $5,000 may not seem like a lot of money to some, right? However, $5,000, depending on the price of your home, can represent anywhere between 2 to 3% of your down payment money. So buying into Baltimore, being able to take a tour, I'm actually going to sign up for that tour. Again, it's on January the 26th. I'm going to sign up to be on a trolley, and I want to recruit and have a team of homeowners, home buyers who want to be able to capitalize off of getting free money to be able to take a tour. If you're thinking about moving to Baltimore, there are a lot of developing areas in Baltimore City. There's some great areas in Baltimore City where you can buy a fully remodeled home, fully rehabbed homes that are absolutely beautiful. Some of the homes that I walked through in Baltimore, just 3 bedrooms, 4 bedrooms that are priced at $200,000 or less. Yes, PG are probably like, what are you guys talking about in a DC marketplace? Because that's not a normal price for the Prince George's County DC marketplace. But in Baltimore City, you can own a fully remodeled 3 to 4 bedroom duplex home, or sometimes it's a single family home for under $200,000, completely remodeled. And with this program, Buying Into Baltimore, I'm going to start hashtagging Buying Into Baltimore. You guys, you are going to be able to ride the trolley with me and tour the 10 neighborhoods so that you can see the developing areas in Baltimore City. Another thing, so what we'll do, we'll run that, and I'm going to keep hashtagging it and create the link that you can go ahead and sign up. There are home ownership counseling programs that they have. They just want to talk to you, make sure you're aware that you're an educated and informed buyer, and so they'll do that in person, individually, as a group. Just truly understand you understand. They want to confirm and make sure that you understand the importance of buying a home and really understanding the 30-year commitment that you're going to be entering into. Okay, it's a long-term commitment. Remember, some of us, you think about how many people have been married for 30 years or what 30-year commitments you currently have, right? And it's probably almost none, right? Our children or spouse are normally our longest commitment. So again, that's the counseling program. It's the only thing that's attached outside of taking the trolley ride. Welcome Elizabeth, welcome Daniel's on the line from Apex Mortgage, welcome Alicia, and welcome Jermaine Avery. Welcome, you guys. We're crushing it on a Monday, crushing on mortgages. That's what we're crushing on today. Another program that I wanted to talk to you all about is the Maryland Mortgage Program. So I wrote out a scenario. I have a client, and based on good credit score, she has good 2-year work history in the same industry. Everybody remember, your work history, you don't have to be at the same company for 2 years, you just have to be in the same industry for 2 years. And so, hi Maureen, welcome. And so, hello Shauna Middleton, thanks for joining us. So again, with the Maryland Mortgage Program, they have different programs from people with disabilities to, if you need more money, grant assistant money, or if you need a low interest rate. Maryland has these programs, and they actually have money available. Okay, and I was just calling today and getting this information. I was excited that Baltimore City still has money today that you can move in for under $3,000. So between $2,000 to $3,000, Baltimore City puts you in a position to be able to own a fully remodeled home. The Maryland Mortgage Program, same thing. They have a grant assistant program. They have a forgivable loan program. There's so much money available to us, and to people who really take home ownership seriously and really want to make a change. Stop wasting your money on rent. What I'm going to do now is, as I promised last week, welcome Karen. And Sean Banks. Hey Sean, welcome. We're crushing on this Monday. What I promised last week is to bring on Daniel Pete with Apex Mortgage so that he can give you some information on his mortgage programs that he offers. He has a 2% again grant program, and give you guys the opportunity to ask any question that you want. We had good questions last week about being able to obtain a commercial loan and understanding that's a conventional. So I'm going to bring Daniel on. I think Daniel, I can see different people I can bring on. Daniel, I'm not sure if you're not on the app, it's not allowing me to bring you on. I can see for different options for people, Alicia, Jermaine. I think if they're in an app, it's allowing me to bring them on, but for you, it isn't. So you may have to log in. If you're logging in on a computer, you may have to log in online, Daniel. So we'll give him a couple of minutes to do that. But while he's doing that, and I'm waiting for that option to pop up to bring him on, I'll finish telling you about the Maryland Mortgage Program. Okay. Oh, here he goes. I'm able to bring him on. Okay, hold on, Daniel. I'm going to bring you on now. This is the time to be able to speak to a loan officer. There you go, Daniel. Hey, Daniel. Uh-oh, you have a bad connection, Daniel. We can see you, but you sound robotic. No, your connection is bad, Daniel. All right, we're going to give him some time to change his connection so that he can answer questions you guys have. You guys can start typing in the comment section any questions that you all have. I told you last week that he would be on our so that he can answer questions you guys have. You guys can start typing in the comment section. Okay, Daniel.
Yes.
I can hear myself. I don't think that's a good thing.
But I can hear you. I can hear you well.
Me? Okay. All right.
Yes.
Okay, you're coming through clear now. Go ahead, Daniel. This is Daniel from Apex Mortgage. Welcome, Daniel. COVID-10. Daniel Pete from Apex Mortgage is on. Daniel, we're going to turn it over to you. I don't see any questions posted, but just give them some information on the programs that you have available, the grant money that you have available, and let them know really what you're looking for when a buyer application comes across.
Yes, sure. Hello, everyone, and thank you very much for chiming in on this Monday evening crush. Real quick, one of the exciting things we do have, like Lola have mentioned, is our 2% program that a lot of people are taking advantage of. And what's great about that is it's a program where it's money that you don't have to pay back. A lot of these grants out here, you actually have to pay back. Ours is forgivable. So we're giving you 2%. The average FHA loan requires you to have 3.5% of your own money. But we're giving you 2% of that. So which means you're only bringing in 1.5% of your money in. To still be able to qualify for the program. And also, even with the amount of money that you make, the median income, the average median income could be like 80,000 to 110. Ours may allow you to go up to 200,000 if you're that person that make that kind of money. It's a phenomenal program. All what we require is that you do have a job and you've been on that job for either 2 years or in at least the same field for 2 years consecutively. Okay, being able to have a credit score of 580 and above, which is very good because a lot of these programs want you to have 620. So as long as you can get what is called as an approved eligible, and that is a DU, a process that we put your information in, and then you get approved for it. Once you're able to get approved for that, then we would start the process of moving you in terms of getting you ready for a mortgage. The other thing is, of course, is having money in the bank. You don't have to have a lot, but you always want to make sure that you have at least a 1 to 2% of what you make in the bank if you're able to do that. That way, again, you're showing yourself that you're ready. And we're going to walk you through the process to make sure it's seamlessly. I think that Lola is phenomenal. She speaks eloquently and she understands the business, and she's willing to work with anybody who is willing to work with her. And she will be very honest and candid about what's necessary. And so will I, because our only goal is to put you in a home so that you can call your own. So if you have any questions, feel free to chime in.
So Daniel, can you expand on what DTI? So DTI it's a term, and I believe Daniel Davis just said the volume. I think that's what VOL Mint. Hi, Andre. So can you expand upon what DTI stands for and give an example, a very if as simple as possible, so that
Okay.
everybody can understand, because that's a very important point, the DTI. So if you can expand on that.
Not a problem. What DTI stand for is your debt to income ratio. What that means is the amount of debt that you have coming in, be it credit cards, car notes, things like that. So at the bottom of that, meaning that if you owe an additional, let's say $700 a month already, and you're trying to purchase a home, so that is your back end ratio. But your front end ratio is your debt that they will allow you for just your home itself. So your home ratio could be like 28% of the income that you have coming in, and that's based on your gross income. So let's say if it's 28% your gross income, but your back end could be 42 or something like that. So they look at both of those and say, okay, great. As long as you're 42, in our case, it's 49%. Well, I'm just giving you just the average. The average they want you to be at between 42%. And so that's based off of the amount of income you have coming in. So which means that if you have, let's say, $1,700 would be your total income debt to income ratio, you're going to need 50% or 60% more that you come in. In other words, we're going to just use 50%. So if your $1,700 is your debt, that means you have to bring in at least $3,400. Okay, so that's
So Daniel,
just an
I
easy
see
way to show.
everybody there. Daniel, I think you're echoing. I think I'm seeing everybody put, oh, thumbs up. Never mind. Okay. I thought they were putting the volume. Okay. So did everybody understand that? If it made sense to you as far as your debt to income ratio, they want to make sure, banks want to make sure that you are able to, on top of your other monthly bills. So if you have a credit card, you may owe $1,000 on the credit card, but the monthly amount due may only be $20, right? So they don't hold that thousand a month. They hold that minimum payment amount. And what they'll do is say, in addition to your car note, only things reported on your credit, correct, Dan? You know, car insurance is considered cell phone
That's
bills.
correct.
Those are not
That's correct.
items that are taken into
Right.
your debt, but they
Consideration.
only can look at items attached to your credit. So car notes, credit cards, student loans, right? A lot of us have student loans. So I mean that has stopped a lot of people from being able to purchase because they owe 30, 40, $50,000 in student loans. Then and although they may have a deferred payment, then you talk about student loans and how that impacts people's home buying ability.
Yes, absolutely. One of the things that the Federal Housing Administration have looked at, because they've lost plenty of money over the years by trying to insure all the loans. So what they did was they said, well, look, great, we're going to insure these loans. Years ago, they would allow you to basically put your loan in out of a forbearance or something like that, but not be accounted towards your debt. So now, although you can say, hey, my loan is not to be counted in regards of you paying it on a monthly basis, they take 1% of the total. So, for example, like she said, if it's $50,000 that you owe, that means that 1% of that is $500. So you have to add that towards your debt. So you always keep that in mind when you look at all of the student loans that you owe. Just take it all in total and multiply it by 1%, and then they'll pretty much tell you how much on a monthly basis that they're going to add towards your debt. Even though you're not paying it, they're going to add it anyway.
Okay, and I
Hmm.
can tell you guys from personal experience when I purchased my home and 2 years ago, I had for about $40,000 in student loan debt, and what the bank did was took 1%, meaning they calculated $400 a month as a future payment. Now remember, your loan is a 30-year agreement, okay? So if although it may be deferred today, that it will eventually come out of deferment. And because your mortgage is a long-term commitment, they must consider and take into account the future. to ensure you're able to pay for the loan that you're taking out. Daniel, we have a great question
And
from Ms. Lashawna
and
Middleton.
the answer to that is no. It's based on conventional loans as well as FHA loans. Okay, FHA, I mean, conventional also requires 1%. Now, the good news is if a person has really good credit and they want to do is Freddie Mac will allow you only do a 0.5% of that. So, which is good, which means that they only taking 0.5%, which is less. That's $250. If it was 500 for an FHA, then it's only 250 if it was for a Freddie Mac loan.
All right, so you got 1% if it's federal housing, if it's your loan is insured by the Federal Housing Administration, a 0.5%. They call it a debt load. If it's
Freddie Mac.
Freddie Mac, okay. So are there any more questions? I just want to make sure, Tina asks, what do they look for? And in addition to what we already covered before, 2 years in the same industry, having some money in the bank, at least you said 1% of what somebody's income
Well,
is.
1% of how much I mean, if you know you're making $30,000 or whatever the case may be, whatever you bring in monthly, you got to make sure you have at least one. I'm sorry, I shouldn't have said 1%, but at least one paycheck worth. If you're getting $2,500 a month or 1,500, you should always have at least that amount in your savings or your checking. All right, because the ideal piece is always to have $3,000 or more, even if you're not using it. But what that does is it shows that you have strength in your checking and it's consistent.
Hi, Jessica. Welcome. Miss Middleton also asks, is that state to state?
That's a federal. That's a federal loan. So when you FHA is federal. So therefore that is across the board. But even with what is that, the Freddie Mac, that's pretty much federal as well. So no matter where you are, it will still be that 0.5% that they offer. Now, to
Okay.
my understanding, that's Freddie Mac, but not Fannie Mae. Fannie Mae also wants to see the 1%.
Okay. So the idea here is to remember, if you have, student loan debt, which a huge portion of my age generation, 40 and under, if you we have student loan debt. So if you have student loan debt, it is something that is considered and taken into account, which you will want it to be, because one day you're going to have to pay that monthly amount on your student loan. You have to repay it at some point. So you would want to ensure that you could afford to pay it, even in owning a home and paying out your monthly mortgage every single month. Student loan debt is real, right? It's real. We go to school to
Yep.
obtain the jobs that we have, but the idea is to be able to own a home. So we want to ensure that you can afford the home, um, truly, right? You don't want to borrow more money than you can actually afford. And welcome, Charles, and welcome, Tyrita. We're gonna, wrap up with our Mortgage Crush Mondays. It's always so much information. I'm going to be hashtagging buying into Baltimore every single week, sending you guys the link. If you're in the Baltimore area, do not miss being able to just take a tour of up and coming cities and developing cities in the Baltimore area, and being able to get free money just for taking a tour to go, which can really account for between 2 to 3% of your down payment, depending on your home loan amount. I mean, this is a great, great program. Buying into Baltimore, let's buy it up. Let's buy the block, and so many other hashtags we have. But let's make sure that we're
I want
taking
to say
advantage of
hello to
this.
Serena and hello to Tanya for chiming in. A couple of people on my end just chimed in. I just want to say hello to them. Okay. Hmm.
Awesome, awesome, awesome. And welcome Shakita James. I know she's a realtor as well, so welcome to the platform. So, that's it. Again, you guys, Daniel P can be contacted. He's Daniel P with Apex Mortgage. You can inbox him, shoot a text, reach out, ask me any questions. The free credit analysis, just to see where you are today, see what needs to be done, and truly getting you pre-qualified, not just looking at your credit score, but looking at the number of uh, uh, trade lines, and we'll talk about that next week, ensuring that you have enough active accounts and are not just paying off everything to zero and closing your accounts and saying I don't owe anybody, and it's like, well, you still can't get credit either. So we're going to touch on that next week. There's so many components into buying a home, and always just so much information to give on one session. But thank you to everyone for joining in. The recording will be available, and let's continue to be crushing on our mortgages and keeping our hashtag MCM to mean Mortgage Crush Monday. Thank you. Oh, I'm sorry. We have one more question. Is all the houses a part of the rehab program? No, they are not. For Baltimore, all the houses are not a part of the rehab program. You can buy fully remodeled, fully renovated homes, ready to move in. So no, they do not have to be a part of the rehab program. But you can, if you choose, get a rehabilitation loan, and that's a note I'll take. We can talk about that next week. Rehab loans to be able to buy a home if you wanted to buy a home that needed some repairs, and if you are bold, along that investor line, but you can renovate your own home and get money through the loan and not out of pocket to do that. So thanks so much for that question. I'll add that to next week to talk about rehab loans. We'll talk about having a well-rounded credit report, right, and having the proper amount of open accounts. We'll touch on that next week. And if you have any other questions in between, please reach out to myself directly. Thank you guys so much, and enjoy your evening.
Yes, thank you. How about you all?